Hey guys, what's better, stocks or real estate? Hey guys, Toby Mathis. Today we're going to be talking about stocks versus real estate. What's the better investment? What's your opinion on it? Last time I did a video on this, I ended up with lots and lots of comments. It's always fun. So feel free to down below put your comments and give your commentary. I always enjoy it. Number one, let's talk about the growth of assets in general. I have a real simple philosophy. Assets feed you and liabilities bleed you. So if I ever buy anything, I need to be seeing money put into my pocket, otherwise it's a liability. So when you look at an investment, you want to have something that's putting money in your pocket. And we just eliminated about 90% of the investments out there. And let me show you why. I'm going to give you kind of a visual depiction of what it looks like. But let's just say that this is a baseline. This is a baseline of growth. You know, hey, let's just see if we're just steady Eddie. What we see is things like gold and your home, right? They're going to be right around in here. Gold and your home. Over time, this is about the growth pattern on it. It's kind of a linear curve. When you see exponential growth is when you start getting into things like, let's just put the S&P 500, the biggest 500 stocks, or we go up here and it's really close. They jockey for a position. Rental real estate. And by the way, if I was being fair, the US dollar's down here. So if you're one of those put your money under your mattress and just kind of hold it and you know, I'm going to be rich someday, don't do that. Right? You're losing value because of inflation's devaluing the US dollar constantly. So the purchasing power of the US dollar, just go chart it out someday. Just put it next to the S&P or pick a REIT, which is a real estate investment trust. Pick something and then compare it to gold in your home. Like, it's just not even close. What's the difference between these things? Why are these guys jumping up versus something like gold and your home being steady? And I know I just pissed off all the gold people. I'm not saying it's not a great thing and you shouldn't have gold. I'm going to say, yeah, you should have some, but it's not an asset in my book. It's not paying you. It's not giving you, you can't go buy groceries with the money that the gold is kicking off. It's going up in value linearly. Like, it's just going, I want to see dynamic growth, and that means we need a compounder. That's the word. So when I look at the difference between stocks and real estate, I'm going to say both have the ability to have compounders. There's stocks that are just growth stocks, right? You buy them and you hope they go up. That's not what I'm talking about. I can't pay for the groceries with a hope and a prayer that something's going up. I mean, I could borrow against it, but then it's going to cost me against that growth. What I need is money. So in the stock market, the type of money we get is something called a dividend. So that's a big one for us. And the stock market growth, if I look at the S&P 500, since its inception, so if we go back to I think it's like the 1920s, the average growth rate as of what I'm sitting here today is over 10%. Of that 10%, about 40% of it is the dividends. So like you factor in the dividends as part of the growth. So you need a company that is paying shareholders. And if you don't know what that means, you have to look at a company, you look at its ticker, and you look for the dividend yield. And if there is none, that means they're not paying out a dividend. If it's, you can look at their history and make sure it's a dividend-paying company. But I'm going to take it a step further. I don't trust these companies, these wily companies out there, unless they've been doing something for a long period of time. So I want to see a pattern of behavior of dividends for at least 10 years before I'll even consider the company. And yep, I just removed myself from all the growth stocks. So I just eliminated my ulcers. I'm sorry, but I'm looking for cash flow. And I'm just telling you, which is better? We're going to get to that. It's going to end up being both. And then I'm going to give you which one's better to start with. But both stocks and real estate can be fantastic if you identify where the compounder is. In the real estate market, it's rents. So real estate generally grows right around 4% to 5% over its history. If you look at it over a long enough period of time, don't give me the last 2 years stuff. No, we're going to look over a long time horizon because we have to make sure this is repeatable. If we try to time things, it just, study after study shows it's almost impossible to time markets. What you can do is you could say, here's the best information I have based off of history and things like that, and make good decisions. But at the end of the day, the people that are the wealthiest in this country, the ones that consistently make money, go into those two compounders. Dividends are the equivalent of rents. And here's the trick. Both dividends and rents grow as well. So if I'm owning a stock and I have a dividend, and that dividend consistently grows over time. By the way, there's things called aristocrats and kings, where the growth of dividends has been going on for 25 years, 50 years, 60 years, year after year, the dividend grows. And people are still going to say, well, you got to do the growth stocks. The stock grows too. You're getting a twofer. But it's this guy here that makes the biggest difference. So when I look at stocks, I'm going to narrow the market down to things that have been increasing their dividends for at least 10 years. I'm going to be weighing it more towards that 25 to 50 year. The longer period of time you've been increasing your dividends, the more I'm paying attention to you, and I'm going to let that be one of the compounders. When I look at real estate, I don't just buy a house and leave it vacant. I don't just buy a rental property and say, I hope it goes up in value, I'm just not going to rent it. No, I'm going to rent it, and those rents also increase. So I'm getting the growth of the property, and I'm getting the rents. So now that we've gotten that out of the way, what's better? Those. They're essentially equivalent. Now I have to have an intelligent conversation with myself and what my risk and what my liquidity looks like. Because here's the reality. Stocks are very liquid. I could turn it into money quickly. Real estate, not so much, right? So if I'm just going side by side, liquidity-wise, it's hard to get your money out of real estate if I have to sell. Stocks I can sell. Both of them I can borrow against, by the way. People don't realize that you could do a security-backed line of credit on a blue chip portfolio and borrow about 50, 60% of that out if you need to. You can have a line of credit. I do. And if I need cash, and I'm sitting on a bunch of real estate, and I'm real estate rich and cash poor, I could borrow if I need to from other assets. Or you can borrow from your real estate. If you're really struggling out there and you're like, oh shoot, what do I do? You could borrow against your real estate, but it's much more difficult to get your hands on the money. It's less liquid than stocks. So if I'm starting and I'm worried about cash at all, I'm sorry, I'm giving the nod to stocks. Historically, they're both fantastic investments. Historically, they both can have compounders, but I'm going to give the nod to, it's just, even if I sell a real estate, I might be lucky to get it closed within 2 weeks. More than likely, it's going to be 30 to 60 days so that I can go from soup to nuts. Stocks are also cheap to buy and sell. There's not a lot of transaction costs anymore. In fact, for the most part, I can buy shares in a company. I go to Robinhood and buy it for free. And I sell it, and I have my money in 2 days. Real estate, generally, I'm going to have transfer taxes. I'm going to have commissions if I'm selling a property with a realtor. I'm going to have closing costs. I'm going to have the deed, all those costs. It's much more expensive to get rid of. I'm not saying I hate real estate. I'm saying I love real estate, but here's the downside. Now, here's a trick. You ready? Here's a hack. If I want to use the benefits of the stock and still invest in real estate, then I do what's called a real estate investment trust, a REIT. And I can buy and sell stock or my real estate just like a stock. I can do that. I could go into apartments, I could go into public storage, I could go into whatever, but I can go in and I can be involved in real estate and still get a bunch of the benefits without having the illiquidity. Let's see if I said that right? Now, stocks are also cheaper to get into, so I can do it with less money than my real estate equivalent. Real estate, generally, you're going to have to put a lot of money in. And even these guys that say, oh, you can buy no money down. Yeah. All right. Good luck. You could work, and hopefully you're going to find some, but it's going to take cash at some point. And it's going to take quite a bit more than if I just want to buy stocks. If I have $100, I can buy stock. If I have $100, I'm going to have a tough time, like even if I'm a wholesaler, getting things under contract, things like that. A lot of times I'm going to have some money. Even if it's a small amount, I'm going to have some money to go out and actually invest in real estate. So I'm not knocking real estate. I'm a huge real estate investor. One of my favorite things in the world is both of these. But I'm just saying, here's the downside, here's the upside. It's more cash, it's slower, harder to get in and out of. Both of them are absolutely fantastic. And if you're doing this, and by the way, I'll put like that, there's your baseline. Hey, you can have growth on your compounders. You can have growth on your rents. So those dividends are fantastic. By the way, from a tax angle, since I'm a tax attorney, I'll just tell you, dividends are taxed as long-term capital gains when it's qualified dividends from U.S. companies. So for the most part, if you're investing in these and you're getting these dividends, they're tax advantage too. Like if you're married, filing jointly, making less than 90 grand or so, you're probably paying zero on that. So that's a benefit. Rents, you get to take depreciation against your rent, so you're probably not paying tax on that either. Both are fantastic, right? From a tax standpoint, the tax code is literally yelling at you, the universe. Hey, this is the universe calling. This is the U.S. tax code calling. Invest in both. And if I'm doing it in order of difficulty, I'm starting with stocks. I'm buying dividend producing stocks. I'm filling up my buckets there, making sure that I have nice cash flow, and then I'm stepping into the real estate world once I have some liquidity and it's not going to kill me to carry property if I need to. If you've never been involved in rental real estate, I say you're going to want to buy a house and you're going to learn it, but make sure that you have some buffer. When I get into real estate or when I get into stocks, I don't have to have nearly the buffer, and it's easier to get out of just in case I get into some hot water or have an emergency or have a dire need. Then I'm able to do it. But if you're going to do it, that's how I would start. So which is better, stocks or real estate? Yes, they're both awesome. Which is better from a ease of getting into it? I'm going to start with stocks and then I'm going to move to real estate. So all you real estate investors, I love you, and you could tell I know there's people that are just like, I hate the stock market, I hate this, I hate that. And then there's the stock people that are like, I love the stock market, I hate real estate. You want to actually be exposed to both. And even if you're a stock person, there's a way to expose yourself to real estate through the use of REITs. And if you're a real estate person, get over it. Get some stocks, man. There's a reason most of the wealth in this country is held in that stock market. There's a ton there of the wealthiest people. I think it's the top 10% own 90% of that market. There's a reason. It's because if you do it correctly and you're using like Warren Buffett does, you're buying great companies that are producing cash and you're treating it like an asset, it's going to pay off over the long run and do you great. So good luck with you. If you think this information is good enough to share, please share it. If you'd like to subscribe and click that little bell, it'll let you know when new videos come out. So if you like this type of content, by all means, subscribe and click that bell, and please leave me your comments.